Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex market news broadcast for Tuesday, February the 5th, 2008. The headlines out of Switzerland this morning read, "The Reserve Bank of Australia lifted rates by 25 basis points to 7% ahead of the ECB and the BOE meetings." The dollar slipped against the euro and edged up against the yen on Monday as investors waited to see how the major central banks at their policy meetings this week will respond to a potential global economic slowdown. The Bank of England and the European Central Bank are all due to meet this week. They will be focusing on whether they are concerned about the severity of the U.S. slowdown and whether it will affect their economies. If these banks warn about the slowing conditions down the road, then investors' willingness to take risks could suffer, hurting the higher-yielding currencies such as the Australian dollar and helping the lower-yielding units like the yen. The Reserve Bank of Australia lifted rates by 25 basis points to 7%. They said a significant slowing of growth was needed to keep inflation contained, which Forex traders took as a signal that more rate raises could be in store. Yesterday, the euro-dollar climbed to 148.25, largely driven by gains in the euro-yen and profit-taking on the dollar's burst of strength on Friday. The euro-yen was up to 158.21, while the dollar-yen ticked up to 106.72. The Australian dollar rose to 90.73 after earlier touching a near three-month high of 91.01. The pound dollar gained to 197.47. Uncertainty continued to rule the U.S. dollar after it was whipsawed last week by another hefty interest rate cut from the Federal Reserve, and the weak data on the U.S. growth and jobs, and a surprisingly robust manufacturing report. Since the credit crisis flared up last summer, the European Central Bank officials have kept their focus on containing inflation and played down the risk of a growth slowdown. However, some analysts do not think that the Eurozone can escape from the effects of the slowing U.S. economy. The ECB is expected to keep rates on hold, and the Bank of England will likely lower borrowing costs on Thursday. The sterling firmed broadly in a snapback from heavy selling on Friday. The Fed has already slashed its benchmark interest rate by 125% in the last 2 weeks, the biggest move in that time frame since the U.S. Central Bank began using the Fed fund rate as its primary policy tool in the early 1990s. Headlines during the Asian session read, "The yen depresses yet again, and the Aussie rises." The yen faltered yesterday against most majors, notwithstanding the rate cuts announced by the Feds last week in reaction to a possible protracted recession. The global stock markets rose sharply from their lows of January the 22nd. This rise has a positive effect on high-yielding currencies and has a negative effect on the yen. Many analysts are also arguing that this decline clearly shows that the Bank of Japan finds it difficult to hike its rate as long as the Fed persists in their spiral to cut rates. The yen's decline has also much to do with the Australian dollar's rise. It has been up by 4.7% against the yen since January the 22nd, and yesterday rose again to 96.90. It is also up against the dollar at 09.08. a gain of about 4%. The Australian dollar's renewed strength is propelled by two factors. One is the aggressive stance of the Fed. Together with this is the widespread consensus that the Federal Reserve Bank of Australia would raise rates by 25 basis points to 7% after the scheduled meeting today, which it did. Inflation numbers came in and showed a greater than expected level at 3.4%, well above the 3% that had been computed. Depending on the statement that was issued with the raise, the Australian dollar could even rally further. The euro budged only a little against the dollar. It was not able to set new highs against the greenback in wake of the Fed's decision to cut rates last week. Today's Eurozone retail sales came in with disappointing figures, and thereby underlined that consumer spending is weakening in the fourth quarter compared to the third quarter. This figure will also put in balance the difficult decision of compromising between slow growth and short-term inflationary pressure. This indecision has some thinking that the euro may be losing steam against the dollar. The failure of the euro-dollar to breach the 150 level, especially after the reports published last week in the U.S., has many analysts thinking the dollar may have reached its final stage of its sell-off. That concludes our news for today. We hope that you're finding these broadcasts or newscasts beneficial to your trading. We have had several requests to include charts in a broadcast. We're still trying to figure out how to do that successfully. We may have to post a separate video with that feature because the time constraint here, which I believe is approximately 10 minutes, and we only have maybe 1 or 2 minutes left at the end of most of our broadcast. But we are working on that project, and we hope to have it up and running by the 1st of March. Before we sign off, we would like to invite you to view our website at www.succeedinforex.com. There you can find a link to our Yahoo form, which is also Succeed in Forex. And you can find some information about our Traders Trading Center, where our motto is Traders Helping Traders Succeed in Forex. Thank you for viewing, and hope you will be able to join us tomorrow for our next broadcast. Until then, have a great trading day and happy pipping.